Toronto home prices spiked a lot in February. Sales are up more than listings, and the thought of like a rate cut that's coming down the pipeline sounds like the dumbest idea right now. It's just going to add fuel to the fire. And this is why everyone is front running these rate cuts that we're expecting and buying right now. Are we primed for another huge pent-up demand in spring like we saw last year? Yeah, stay tuned to find out. Now, if you're looking for some help on how to navigate this real estate market, because again, this year is very, very weird, as with most, I guess maybe the last 3-4 years, and you want to navigate this as profitable as possible, you can book a call with me using the link that's right here. It's www.chatwithzed.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. The latest numbers from the Toronto real estate market is up, and the prices have spiked 8%. Yeah, here's the numbers. You can see basically everything is green, which means everything is up. And the only thing that is red is the month of inventory, which actually is green because as it comes down, it generally means prices are going up. Right? Now, the interesting thing here is that the sales and the new listings are kind of around the same, right? But the fact that the months of inventory is down tells me that the amount of active listings is falling, whether it's being sold or it's being bought. The idea is that the supply is getting tighter and tighter as we head into the spring. Now, as a reference, 8% increase is pretty high because if you compound that, that's like doubling up by the end of the year, right? But February averages around 5.6 increase. Again, this is very normal because there's a lack of supply at the start of the year because it's usually new year, new me, new house, but the listings don't come. So I don't expect this 8% increase monthly to continue after March. So, it should taper off in theory. Now, if you look carefully, 8% is the 6th highest month increase historically in February. That's not nothing to sneeze at, okay? So it is something. And you can see over here that basically the 4 and 6 semis and towns are on an absolute friggin' tear. And this is basically the entry-level freehold within the core of the city that everyone's trying to gravitate towards. You can also see that the detached segment has moved up quite a bit. And this is not because the big homes are out yet, usually after March break. It's because these separate entrance bungalows that are all over the Toronto area are seeing double-digit offers and people are buying them quite rapidly right now for quite a high price. We're also starting to see the 905 market move as well, like specifically the freehold. But if you look, like I've been telling you, the condos are soft. It's just like I've been saying. It's gotten some tailwind from the uptick in demand, but most of that demand is still focused on the freehold properties. And I suspect it will continue like this for the rest of the year as I predicted. Now, if you look at this chart, you can basically see that we're back at March pricing of last year. So all the downs we had that we saw from the surprise rate hike, yeah, we made it back just like that because our market is volatile. And you can see that the 8% jump, it was bigger than last year's February when demand started picking back up, and it continued that way right until we got that surprise rate hike in June. And you see why I'm saying that the thought of a potential rate hike coming down, whether it be summer or fall, whatever, it just seems like the stupidest thing right now. But look, monetary policy via the blunt tool that is interest rates is not the best tool. It's like a hammer and everything looks like a nail. It keeps hammering everything. But we have a whole bunch of stuff that isn't real estate related that's affected by the financial markets and interest rates as well. And if you look now, real estate is having a resurgence. Crypto is having a resurgence. Stocks are at an all-time high. Everything is rally, but there is softness in the economy, albeit not as soft as most people have thought, right? So is there even like a need to cut rates right now unless we have a recession? See my point, right? Seems stupid, but again, video for another day. So if you look back over here, back in Market Watch data, you can see that listings that we've retracted back to the 6-year norm. We're still elevated, right? Don't get me wrong, we're still elevated, but not as high as what we were a few months ago, but not enough to move the needle. We're still elevated in the sense that we have inventory, but the months of inventory is decreasing at a pretty normal rate relative to most of the years, except the last two, which have been a little bit off. And this is what I've been saying. We're just reverting back to the Toronto norm of perpetually being in a seller's market, and the speed of our inventory is going back to the Toronto norm. And with months of inventory below 2, again, it's generally a pretty good indicator that prices are likely to go up, unless we get so much inventory after March break that we cannot absorb it. Obviously is like a non-zero chance that could happen, but I'm very doubtful given that there's so many offers on the entry-level freehold stuff right now. Now, I'm very curious to see how these big boy detaches fare in this market after the March break because we haven't seen a lot of momentum in it, but we're going to find out very soon. Now, if you look at these historic numbers, you can see that we're basically very average for the amount of inventory. And that's where I would argue that a bit high for the last 10 years. But when we overlap this over this chart over here with the amount of sales we've gotten in February, it's exactly why it seems a little bit feverish right now because we have so many sales happening. If you look carefully, you can see that we have the third most sales ever in February, and it is behind 2 years. And those 2 years were basically the pandemic when everything was selling, right? So sales all over the place. So things are moving, lots of listings, lots of sales. And when you look historically at their new listings, you can basically, we're pretty high right now because a lot of sellers are trying to take advantage of the fact that the market is stronger again. It's going into a seller's market or already in one and continuing that way. So unless sales like really fall off, from the norm in March, we should continue seeing the Toronto real estate market, return back to its normal cadence of a proverbial seller's market, right? Now let's look at the speed of the market via the months of inventory. And you can see that we're back down to 2 again, like I was saying earlier, and we're well below the historic average. We're kind of like right back to the averages of the 2010s, which is historically a pretty strong seller's market outside of that crazy boom we saw in 2017. And again, months of inventory is a good predictor of where prices will be in 36 days. And it's probably going to go up with these numbers. Again, this is proof that we're going back to the proverbial Toronto seller's market, right? Now you can see over here that the sales to new listing ratio, which is the new chart I have for this year, is at 50, which is perfectly normal. It just means that we're getting a healthy amount of sales and a healthy amount of listings. It's just whether these listings last that long with the demand we have is the question that everybody is wondering right now as we head into the spring market. So hopefully this gives you an idea of what's happening. Last month, we saw that the months of inventory was dropping and the prices didn't really go up. And in fact, they dropped quite a bit and now they kind of rebounded very high. So give it a little bit of a yo-yo effect, but we are very much seeing that resurgence of demand, the lack of inventory show up in February. Remember, these numbers are previously behind us, and now looking forward, I do suspect that we will have more inventory coming online. I don't expect prices to go up 8% again in March. If they do, we have a huge problem. Really, we got to rethink this interest rate thing, specifically for the real estate market. But after seeing all of this, and if you want to figure out what makes sense for you, whether you're buying your first home, moving up, or trying to downsize or sell a property and see how you can take advantage of the market trends and some of these numbers that I just talked to you about, you can book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Or this one? You know what? Just watch them both.